everyone, welcome to our Group 5 Business in Morning section. This series, we would like to share our business experience about tax and corporations in Thailand, which is the first spending steps that every investor should know. Moreover, we also has the other spending, including a payment of value-added tax, stamp duty, or specific business tax and computation method. In first basic, in general, we has two main different methods to form a company. In first, we will register our company as a natural person, and second, register as a juridic person, as known as a corporation, which has a different way to calculating tax for the specific company. For today, we will focus on this corporate tax and a clear example in how to calculate on tax. Are you ready? Let's go!
Entering the business cycle in Thailand, your first step is to registration between the natural person or juristic person. These two forms are different in the terms of the credibility, accountancy, and the liability. To register as a natural person, this form is to the small business. The business style is decision by the business owner, so there is the further flexibility is a part of this style of business. However, the accounting is not to be the former as it causes credibility and liability in this business side are high, as the business owner have to bear all the risk injured. By registration as the juristic person, there are more credibility as the registration with the government ministry. Moreover, they are strict in the accounting and need to have the tax accountant to check in their finance. And a risk of liability is shared with the shareholder, and it is limited by the law.
Corporate income tax or CIT is an explicit tax imposed on a juristic company or partnership operating a business in Thailand who also got benefit from Thai business. First, a juristic partnership under Thai law, including a limited company, a public company limited collaboration, and registered partnership. Second, a Thai company who incorporate under foreign law who are related to Thailand. Third, a business operated commercially or profitably by a foreign government or under a foreign law. Fourth, joint venture. Fifth, a foundation or association that carries on a revenue-generating business, but it does not contain the foundation or association as regulated by the minister in accordance with Section 47, Subsection 7b under Revenue Code. Sixth, a juristic person prescribed by the Director General with the minister approval and published in the Government Gazette shall be a company or a juristic partnership under the Revenue Code. On the other hand, businesses which acquire income tax exemption are temple.
Regarding the payment process, first about pay and return. Thai and overseas organizations carrying on business in Thailand, registered under Thai law, must submit their tax returns within 150 days from the closing date of accounting periods. Expense installment should be submitted with the assessment forms. Any organization disposing of the funds that are considered benefits out of Thailand must also pay the charge on the amount of disposing funds and should be discarded within 7 days from the removal date. In addition to yearly duty installment, any organization subjected to corporate income tax on net profits must also make charge prepaid. An organization is obliged to replace its annual benefit dates and its duty obligations and pay half of the excess charge sum within 2 months after the finish of the initial half year from the principal day of its accounting period. The prepaid tax is creditable against its annual tax liability according to Section 68 of the Revenue Code. Regarding pay paid to overseas organizations that are not carrying on business in Thailand, the overseas organization must pay a flat rate. The payer will hold a charge at the source at the time of the installment. The payer should file the return and make the installments to the Revenue Department within 7 days of the following month in which the installment is made. Accounting period. In this term, a payment period can be divided into 2 types: a year as a general case and less than 12 months. According to Section 65 of the Revenue Code, an accounting period shall be 12 months except in the following circumstances. A newly incorporated organization or a juristic association may decide to utilize the period from its incorporation date to one of any date as the first accounting period. An organization or a juristic association may file a request to the Director General to change the due date of an accounting period. In such a case, the Director General will have the ability to allow endorsement as he considers suitable. Such a request will be advised to the organization or juristic association that files the appeal within a reasonable period. If the Director General allows the authorization, the organization or juristic association shall follow the Director General's accounting period.
You might wonder, in how can we calculate a corporate's income tax? In general, they were classified into 4 methods, as I show here. First, calculation from annual net profit, which is the most common for Thai business who register under Thai law. Second, calculation from the income before the deduction of the expenses. This is for the international transportation and charity business. Third, calculation from income paid from or in Thailand for a company who established under foreign law and does not operate in Thailand. And lastly, calculation from distributing profit out of the country for a company who get the profit in Thailand and bring most pay to their hometown. Most of the case is a branch or agents who send back money to the head office abroad. So, we would like to focus the tax calculation on actual net profit. To calculate actual net profit, we focus on calculating tax on a pure profit base, which is the most common way to calculate corporate tax for a business who register under Thai law. Whether inside or outside Thailand, in principle, there are two periods to calculate all of those paid: the corporate tax in the half of year and the corporate tax at the end of year.
To determine a refund or an additional tax, first we will have to calculate from the corporate tax at the end of the year, subtract that with the corporate tax in the first half of the year, including a withholding tax. So basically, a semi-yearly tax and yearly tax are from the net profit or loss taxes times with tax rates in accordance with the law, which is now set to 20%. And here's the trickiest part of the calculation. Most people think that the net profits or loss tax comes from the revenue, subtracts the cost of production, but that is not correct. In reality, the profit or loss tax comes from the accounting profit, which is from the revenue subtract with the cost. And it has been fixed with full process. First, subtract or add the expenses treated as expenses under the revenue code. Second, prohibited expenses. Third, exempted income. And fourth, revenue that are granted from income tax exemption. And here is the example of calculation.
I shall assuming for the half of the year, our company has a revenue of 1 million baht and the expense of 30,000 baht. Then we'll get the accounting tax of 970,000 baht. Then I will apply a fixed process on 4 steps, which our net taxable profit or losses will become 250,000 baht. So the net taxable profit or losses in the half of the year that we use to calculate the actual net profit is 250,000 times 20% according to the revenue code, which we should get the final amount tax for the half of the year of 50,000 baht. If our company has already paid for it, we can use the same method for the tax at the end of the year, and the total is 80,000 baht. And lastly, we need to pay the rest of 30,000 baht since we subtract 80,000 with 50,000. And if our company has a tax withheld, we can deduct it from the amount of the tax as well. For example, if our company has a tax withheld throughout of the year of 20,000 baht, then at the end of the year, our company will pay an additional surcharge of only 10,000 baht.
However, there are some exemptions for companies who has been a part of SMEs and has an authorized capital paid that does not exceed 5 million baht. Also, they have to gain income not exceeding 30 million baht. So essentially, they will obtain income tax exemptions for the net profit of their first 300,000 baht. They will get to pay the tax at the special rate of 15% for their net profit that does not exceed 3 million baht. For the company that net profit that exceeds 3 million baht, the tax still needs to be paid at the average rate of 20% according to the law.
To conclude, the corporate income tax for the startup company registered domestically will be calculated by the taxable net profit generated each year. So the taxable period is from January 1st to December 31st and multiplied by the tax rate required by law. So the company or the corporate has to inform the information to the Revenue Department 150 days after the bill cycle closing date or on the May 30th. So they must send in the information along with the corporate income tax return. Additionally, the corporate income tax for public companies is being taxable at the rate of 20%, but in some cases, the corporate might be taxable at the rate of lower than 20%, and consider from the initial revenue of our startup companies, this might not be a lot. So from this reason, the registration in the form of a company with a paid-off capital not exceeding 5 million baht and doing the new engineer code businesses will be helped with the tax saving more efficiently. Thank you.